So first, the price was falling within the impulse. So here we have a very nice impulse. Fibonacci is getting in the way, so I'll remove it. In trading, the term Fibonacci refers to as a tool that measures price movement and uses it to set horizontal support and resistance levels of the price chart. These support and resistance levels are called Fibonacci levels and are used for making trading decisions similar to regular horizontal support and resistance levels. Hello everyone, my name is Mary and I'm your personal trader. Subscribe to my YouTube channel to stay updated with the new publications where I show you the world of trading. I reveal all the secrets I have accumulated over many years of practice. The Fibonacci tool is applied to price movement. When the price moves in a specific direction, you can accurately determine the beginning and end of the movement. Using the Fibonacci tool, you measure the distance between these points, and the tool automatically sets this so-called Fibonacci retracement level and Fibonacci extension level. You will find a more detailed explanation of these concepts below. The calculation of Fibonacci levels is based on Fibonacci numbers, or more precisely, the percentage difference between them. The Fibonacci tool is applied manually. When measuring a downtrend, you start applying the tool at the beginning of the price movement and finishing it at the end, always from the left to right. In case of an ascending price movement, this tool is applied from the bottom point to the top point, again moving from left to right. As seen in the first chart, when applying the Fibonacci tool, it automatically sets Fibonacci levels between the start and the end of the price movement. These levels are called retracement levels. Fibonacci levels are displayed as a percentage of the overall price movement. Thus, the level set in the middle between the start and end of the movement indicates the 50% retracement level. If the price retraces back to half of the distance traveled, it is said to have corrected to the 50% level. This level then acts as a support or resistance depending on the direction of the observed trend. Therefore, retracement levels indicate the extent to which price can retrace. This chart shows the level of 38.2%, 50%, and 61.8%. These are the most common levels to which price usually retraces, although there are other retracement levels that have also been identified and provided good results. How to choose the right level to entry? Aggressively enter each time the price reaches any of these levels. You can enter the market each time the price reaches a retracement level, setting a stop loss on the opposite side of the Fibonacci level. If the stop loss is triggered, you simply re-enter the market at the next level and continue doing so until the price reverses, which is what you're looking for. This is an aggressive approach to finding market entries using the Fibonacci tool. We wait for the establishment of support or resistance levels at these levels and only then enter the market. You wait for the price to reach a support or resistance level at these levels, wait for it to reverse back in the original direction of the trend, and then enter the market. It is important to know that Fibonacci is not a trading system. This tool should be used in combination with trading system or as a part of a trading system. The Fibonacci tool is not only used to identify retracement levels that traders can use as support or resistance. It can also be used to forecast extension levels, indicating the likely direction of the price movement. Thus, Fibonacci extension can be used to lock in profits or even counter trend entries. Here I have the currency pair Euro and Canadian dollar, and I'm immediately opening a short trade to not miss a great opportunity. Unfortunately, I have to enter a bit lower than I would like, so if the price retraces higher, I will hedge myself and open another trade for $100 or $200, but I'll decide that later. Right now, let me explain why I decided to sell. Fibonacci is getting in the way, so I'll remove it. So here we have a very nice impulse. However, the impulse is interrupted by consolidation. I marked it here for a better visibility. This consolidation breaks the impulse in two parts. The upper part, which is this, doesn't interest me. I'm interested in the impulse that comes after the consolidation. That is, we need to focus solely on this impulse. If we draw Fibonacci levels based on it, it is clear that the price reached the 61% level at the boundary between the green and blue zones. So first the price was falling within the impulse. Then it bounced off the support zone and retraced exactly to the 61% level, just like in textbooks. Both textbooks and my experience tell me that if, after a sharp impulse, the price retraces to 50 or 61% of the entire impulse, there will be a reversal. In general, based on my experience, if the price retraces to the 61 level, there is a 95% probability of the reversal and further movement in the direction of the impulse. In our case, it's a downward movement. I did miss the perfect entry point. But nevertheless, the trade should be profitable because the price should cover a similar distance, meaning it will drop to this level in the next few minutes. Well, if this trade ends up in a loss, I will close it and enter another one for $200. I opened the position. Let me check exactly. I opened the position around this point. But I should have entered at least here. Overall, I missed the moment and entered the market when the situation was already starting to play out. By the way, on the chart, it's clear that the price bounced off the 61% level. If I had entered there, I would have already made a profit. And I'm confident that even now I will make a profit. Well, after all my explanations, we just have to wait another minute and a half, so let's wait and summarize the results. So in 2 seconds, the trade will close with a confident profit. Despite entering at a mediocre point, I made a profit. As you can see, knowledge of the patterns and the market helps to make a profit even if you don't have the opportunity to constantly monitor the market and find perfect entry points. Thank you for watching. Like and subscribe to this channel. If you want to participate in trading sessions with me and receive signals from me, then subscribe to my Telegram channel. The link is in the description. My name is Mary, and I'm the best trader.